Hello everyone, welcome back. In this video, we'll go over the data and show you how to use my software. I'm going to walk you through the data and show you how the no black box principle works in my software, leading us to that shocking 0 out of 10 score for Microsoft. So let's start. Moving over to Market Vision here, we can see that here's the navbar and we click on the monopolistic score. We can see the search box, and so we just select the company that we want, and in this case it's Microsoft, so let's just type in their ticker symbol. We can see Microsoft over here, we click on that. The goal here is to cut through the noise. And we have the results, and we see the final score of 6.2. For some people that might be surprising, but I follow a no black box principle, where I explain everything. Let me quickly go over the scores. Gross margin. Microsoft scored a solid 8 out of 10, showcasing its massive operating leverage. Here's a quick chart that shows us how Microsoft gross margin looked over the past few years. Return on invested capital. What that means is the amount of money that their investments are making them. And for Microsoft, that metric is 19.55%. So they deserve a 7 out of 10 score for that. Here you can see their ROIC metrics. R&D score. Microsoft is in an industry that is dependent on R&D spending. So we get their R&D as a percentage of total revenue. Too much of R&D can be as bad, if not worse, than too little R&D. And so my algorithm has given them a 7 out of 10 rating for that. Moving on, we have the free cash flow margin. This is the amount of cash left over from their day-to-day operations on a percentage basis. The higher the better. And Microsoft is in a clear winner in this category, 9 out of 10. For every $100 in sales, Microsoft makes over $26 in pure cash. We come to the last metric, and that is a crack in their fortress. Microsoft revenue growth is lower than that of their competitors by around 9 percentage points. Look, here's the chart for their revenue growth. You can see that it's at 18% now, but even though Microsoft is a huge company, my algorithm doesn't care. It has everything compared on a weighted, adjusted basis. You can't argue with the math. A score is a score, and so this critical metric shows that Microsoft is underperforming. So what does it all mean? How do we connect this monopolistic traits score to the full investment thesis, like discounted cash flow valuation, health and market share of Microsoft? Well, I've put an entire 16-page article on Microsoft in my newsletter, and the best part is it's 100% free. So just go to the first link in the description and you'll find it there. If you want to become a smarter, more data-driven investor, I will ask you to subscribe to the channel and click the like button. So, thank you guys for watching and stay focused on the fundamentals.